Let me start with Chairman Powell. Chairman Powell, interesting conversation we're having with Senator Schatz on the liquidity problems versus the solvency problems. I do know that you have highlighted that some of the sectors, airlines and hospitality, are in rough financial shape. Because I come from Nevada and it is a hospitality generated state where we get most of our revenue, can you speak to the challenges that hospitality and tourism sectors face right now?
Sure. So I think sectors of the economy like that, where the business model is to gather people in one place and entertain them, feed them, fly them around, whatever you're going to do. Those are sectors where it will take some time for, I think, the public to return. That'll happen, but it'll take some time for the public to regain confidence and, adapt to the new world and start traveling, taking vacations, going to restaurants, things like that.
And I'm glad you brought that up, because that's one thing that we haven't talked about, was this notion that when we look to open our businesses, and I think we all, in my personal way, that's what we want. We've got to find this balance about opening our businesses in general. But they're only going to be as successful as the customer confidence that is there to patronize those businesses. And that's not just true for the hospitality industry. That is true for all businesses. I do know that the service and retail has been hardest hit, that business. And my understanding that some of the data that I've seen, over 2% of those businesses have closed permanently already. And so how are we to address this consumer confidence issue? Because I know that is something that you've thought about and talked about publicly, I've seen. What should we be doing?
One thing I'll say is it affects different sectors of the economy differently. The ones we talked about are the ones where it's most important. Other sectors of the economy may be able to recover much more quickly than that, and we certainly hope so. But the number one thing, of course, is people believing that it's safe to go back to work, safe to go out, and that's about having a sensible, thoughtful reopening of the country, something we all want, and something that we're in the early stages of now. That's what it will take for people to regain confidence, I think, and resume their activities, again, at a different pace depending on the nature of the business, the nature of the activity.
Right. And the healthcare piece of it, right? That they'll feel safe going back out if they feel safe that they're going to be healthy and safe when they go into an establishment. Isn't that true?
It will be a combination of getting the virus under control, development of therapeutics, development of a vaccine, all of those things. And also just, I think, seeing what your eyes are telling you. People, you can feel it already that people are doing things that they wouldn't have done 2 months ago, a little bit at a time. And I just think that process will take time.
Yeah, and until that happens, many people are relying on their local governments and state government as their social safety net, right? They're telling them, looking to local government, state government to tell them how they can stay safe. They're opening businesses, where the healthcare facilities are, how they can get the testing that is needed and contact tracing. Isn't it true? That's where they rely, would be on their local governments in this office.
Yes, and I think that's where the decisions will be made, is at state and local government, also businesses, individual businesses. We talk to a lot of businesses and nonprofits and leaders in all those areas. And what I feel like is, certainly for the larger ones, there's a very thoughtful process going on about this. But ultimately, people will make their own minds up. You can change the formal social distancing measures, but ultimately people are going to decide what they should and shouldn't do with themselves and with their families. And I think that will boil down to having pretty good confidence that it's safe to go out.
Yeah, and I agree with you. And I also know, at least in my state, that many are waiting and relying on their state and local governments to weigh in and help them make those determinations and set those guidelines and make sure their communities are safe. That's why funding for our state and local governments is so important. And I cannot stress that enough, not only in the next fiscal package that needs to come into state and local governments, but you also touched on it, the municipal lending facility. I would like to see more of that available to smaller populated states and local governments. Nevada has 3 million population. There has to be a way to also give them the opportunity to get the liquidity or the funds that they need to ensure that they're providing that safety net, that social safety net to consumers in general. I know my time is up. Secretary Mnuchin, I have questions for you as well. Will submit those for the record. Thank you both for joining us today.
Thank you. Before I move to Senator McSally, I'll announce to those remaining that a vote started about 10 minutes ago, and we still have a number left to go. So I ask you to please pay attention to the clock. Sorry that it just turns out this way at the end of these hearings. Senator McSally.
Thank you, Mr. Chairman. Chairman Powell, Secretary Mnuchin, good to see you virtually. I want to talk about China. As we know, they unleashed this virus on America and the world with their classic communist cover-up, deception, continued propaganda campaign, costing now over 90,000 American lives, 35 million Americans losing their jobs so far. We don't know who patient zero is. They destroyed samples. They silenced doctors. They kicked out journalists, impacted international travel to seed this. And their reckless behavior continues to be at the root of all this. As you know, this is why we're here today. We're talking about the economy, which was very strong, now really struggling. People all over Arizona are really struggling because of the calamity that's come from this virus. So I want to, I don't think anybody, I should say, actually, let me just ask, I don't think either of you think there's any reason that we should be rewarding China or Chinese state-owned enterprises or individuals or entities that want China to prosper as we implement these massive initiatives to support the American economy. Is it fair to say neither of you want that to happen?
That's correct.
Chairman Powell?
Senator McSally, that's really not a question for me. You know, we're at the economic response to this.
I know, but none of us as Americans want to see, you know, China or Chinese-owned enterprises prospering. So I want to talk about a company called BlackRock. On March 24th, the Federal Reserve Bank of New York retained BlackRock as the financial agent to operationalize and transact with primary dealers in the primary market corporate credit facility and the secondary market corporate credit facility. As you know, these facilities serve as markets for companies to sell bonds and obtain loans during this situation, this downturn. Typically, there's a competition, a competitive bidding process, but BlackRock was selected for this one. As you probably know, BlackRock is one of the leading investment banks in Chinese funds, including helping Chinese companies list and go public on American stock exchanges. Chinese companies listed on American exchanges are prohibit the Public Company Accounting Oversight Board, or the PCAOB, from reviewing their audit reports. On BlackRock's website, they have a page titled 5 Myths and Realities About Investing in China. According to BlackRock, one of the biggest myths about China is that Chinese state-owned enterprises don't control their economy. BlackRock even tries to back that up with data. I won't go into all of it, but it's ridiculous. BlackRock's ode to China doesn't mention anything about human rights abuses, military responses to the Hong Kong democracy protests, or even that the country is ruled by a communist party. Ironic that one of the world's largest investment banks and allegedly a staple of free markets neglects to mention the fact that communists actually run China, and all while refusing to invest in a number of legitimate and legal industries here in America, but that's a separate issue. So my question is, how and why did BlackRock get selected as a financial agent for these facilities? How much money do they stand to make as the agent? And what, if anything, will prevent BlackRock from taking their profits that they earn to invest in their interest in China and Chinese state-owned enterprises?
So I guess I'll take that. We hired BlackRock for their expertise in these markets. They're actually an asset manager. They are a very large asset manager, which is active in the markets that we're concerned with the primary market and secondary market credit facilities. It was done very quickly due to the urgency and the need for their expertise. We will rebid the contract as we in practice do going forward. Yeah. And so that's where that is. The fees are a matter of public record, and we'll be happy to supply those to you.
But what, if anything, can we do to prevent any of their profits from this to actually benefiting China and Chinese state-owned companies, which they're severely invested in?
You know, I would just say this: all large asset managers buy Chinese securities. These are global asset managers. It's in no way. You know, I'm not here to defend or criticize them for that. It's just, it's not really relevant to the work we want them to do. What we're trying to do is create conditions in which U.S. workers can keep their jobs or return to them. And that's what our sole focus is. We're not trying to reach out for other public policy objectives or deviate from that. We have really a laser focus on that. And we concluded that this company was the right one to be our fiscal agent in this place. Their views on anything else are really not important. What's important is that we do everything we can to support the United States.
Well, let me just say it's important to all of us, and thank you for all your leadership on this, to support our economy, to support jobs, to get our economy back on track. But it's also important that we wake up as Americans and that we hold China accountable, and that they're not allowed to profit because of these investments taxpayers are made. So I'm going to follow up with you on these issues. I really think BlackRock and others need to also wake up and do their patriotic duty, see what's going on here. China, communist China, should not be profiting off of unleashing this calamity on the world. And that should be something that should unite all Americans, even if they work at BlackRock.
Thank you. Senator Jones.
Thank you, Mr. Chairman. Quickly, I'll follow up. I agree that we need to hold all people accountable. China, the WHO, folks in this administration, everybody needs to be held accountable if they had deficiencies in what was going on in this pandemic. So, Secretary Mnuchin, let me say I saw recently that the Treasury is going to begin issuing debit cards for Americans for their direct payments. You will recall that Senator Cotton and I sent a letter shortly after the passage of the CARES Act encouraging that. So I appreciate your willingness to do that. I think it's going to quickly get money to millions of Americans that haven't received those direct payments as of yet. I wanted to also ask you about the Payroll Protection Program. As we've talked about a little bit early on in the first round of funding, there were some problems with the banks, and there were underserved communities that are not getting their funds. And I think we've tried to correct that and doing much better. But the SBA Inspector General issued a report in the wake of that that recommended that the agency start collecting demographic information on who got those loans. Can you commit to work with the SBA administrator to make collecting demographic information mandatory for these PPP loans so that there is that much needed transparency?
Well, I can tell you in the forms that the lenders are required, there is demographic information. We've been advised to make that optional and not mandatory. But we very much hope that people provide that. And let me just say, we're very much committed to make sure that we serve the underserved communities with the money we have left.
Great, thank you. Chairman Powell, you know, I also saw your speech and read your comments, saw the 60 Minutes piece, and it kind of reminds me, in listening to some of the comments about this, is what Judge Taylor in To Kill a Mockingbird said, that, you know, people are going to hear what they want to hear and they're going to see what they want to see. What I saw is a call to action from that. And one of the things that was talked about, that 40% of the Americans that have lost their jobs and how it is affecting our minority communities, not only in their health and the disparities. What is being shown a spotlight is the disparities on so many things. And you mentioned how this pandemic can exacerbate the existing gap of wealth and assets and ownership between minorities and even just poor people in general. We started this pandemic with about 40 million poor people. It's going to get much better than that, and it's going to be a cause for racial lines. What can we do to try to narrow that gap, to make sure that the wealth gap does not even get greater as we open back up this economy?
Well, the job losses that have been happening in the service economy, and particularly in those parts where you're dealing directly with people. And that is a lot of less well-paying jobs and that sort of thing. So if you look at the industries that have been really hard hit with job losses, it's those industries. It's restaurants, it's hotels, it's travel, things like that, retail. So, and I recommend, by the way, that report, Survey of Household Economic Decision Making, which we release annually. We just released it, and that's where those statistics come from. There's a lot in there, and it is stunning how quickly households get into financial trouble, how many lower income households have in the way of financial resources. These are longer term problems to deal with. I think for now, this very much calls on us to do what we can to support the economy. And as I mentioned earlier, we have 20-some million people out of work. We want to do everything we can to create a world where they can go back to their jobs or find new jobs. And I think that's something all of us as policymakers should be strongly focused on.
Well, thank you for that. And it seems to be connected to your comments of also making sure that we keep people in their livelihoods, to keep the unemployment numbers down. You know, I think from our standpoint, we have been focused on both saving lives and saving livelihoods. And while we don't want to give folks incentives to stay on unemployment, we certainly do want to give incentives to businesses to open carefully. I would encourage you, if you haven't, to look at the Paycheck Security Program that is Senator Warner and others and I are going to be filing this week so that we can give these opportunities, because I'm assuming that the more opportunities we can give employers to keep people on their payroll with benefits, that would aid in opening up the economy safely and trying to keep us from getting into that long-term recession. Would that be fair?
I'll be happy to take a look at your legislation, proposed legislation.
Great. Well, thank you, Mr. Chairman. I appreciate the opportunity. Thank you for coming, Mr. Secretary and Mr. Chairman.
Thank you. Senator Moran.
Mr. Chairman, thank you. Had I have more time, I would extol the virtues of both the Secretary and the Chairman and their efforts, their team, their public service during this crisis. In the absence of that time, I hope you understand the sentiments that that sentence expresses. But I want to focus, I guess, Secretary Mnuchin. We've talked about PPP and we've seen the consequences, the positive consequences that have come from the program. There are large businesses, Main Street, in which the facilities are being developed to assist. But I'm worried about other businesses. I would use an example, not that I'm lobbying for any company, but an example that comes to my mind in Kansas is Yellow Roadway Trucking Company. Employs almost 30,000 people. It is not investment grade. It has leverage. And it is a company that, in the absence of assistance, the jeopardy of its employees are significant. I think there's a lot of companies out there like that. I think there's a number of other companies in Kansas like that. And I want to make certain that we are doing the things that are necessary to prepare to be of assistance to them. I think Senator Toomey and Senator Warner earlier indicated that very few of us expected Treasury not to have to take losses, that there needs to be some risk-taking here. And I want some kind of assurance that under the B4 program, the B4 facilities, that these kind of companies that are hugely important to the economy can receive some assistance with the facilities at Treasury and the Fed. Secretary Mnuchin, is there some level of comfort I can have?
You have my assurance that we will go back and look at that specific company and see what we can do and get back to you.
But I hope it's more than that, because it's not just that company. There's a number of companies across the country, not just in Kansas, that this is hugely important for.
Just to be clear, companies like that, and as I said before, we want to make sure that there are facilities that companies don't fall through the cracks. So between all the different facilities, we're trying to do as much as we can within our powers.
Let me suggest to you that timing is of the essence, just as it was in PPP. The circumstances companies face today and layoff and furloughing employees are present and around the corner. So I encourage the precipitous but thoughtful action in addressing these circumstances. Let me see if I can get two other questions in. One, do we have a time frame, Mr. Secretary, for further guidance regarding PPP loan forgiveness?
There's some guidance that just came out on loan forgiveness that we believe deals with most of the major issues.
And then the second question, Secretary Mnuchin, does Treasury and SBA plan to issue guidance that would allow 501c3 organizations to utilize the alternative size standards for PPP eligibility?
We're reviewing that specific request. So we've had that request and we're reviewing it carefully.
Is that something that's a decision is close to being imminent?
We're going to decide one way or another whether that's whether we can do that. So yes.
Okay. Thank you very much. Thank you, Mr. Secretary. Thank you, Mr. Chairman.
Thank you.
Thank you. And you get a gold star, Senator Moran, for yielding back a minute or so. Our final
Have it.
our final senator for questioning is Senator Smith.
Thank you, Mr. Chair, and thank you, Ranking Member Brown, and thanks to both of you for being here today. Chair Powell you've talked about how we won't be able to solve the economic crisis without solving the public health crisis, which I agree with. And Secretary Mnuchin, you've said that we need to reopen the economy, and I quote, in a thoughtful way, which I also agree with. So it seems to me that a really important part of being thoughtful is to make sure that Americans have accurate information about what's going on. So I have no doubt that you'll be surprised to hear that a lot of us were taken back when a couple of days or so ago, we heard President Trump's son, Eric Trump, acting as a surrogate for his father, say this. He said they think, meaning they, the Democrats, that they're taking away Donald Trump's greatest tool, which is to be able to go into an arena filled with 50,000 people every single time, right? So that they will, and you watch, they'll milk it every single day between now and November 3rd. And guess what? After November 3rd, coronavirus will magically all of a sudden go away and disappear, and everybody will be able to reopen. So this is the kind of misinformation that concerns me greatly. Secretary Mnuchin, are you aware of any evidence that what Eric Trump said, that his assessment is accurate?
I didn't see Eric's comments, nor do I think in this setting it's appropriate for me to comment on it one way or another.
Well, I don't think it's accurate, and I think it's exactly the kind of misinformation that is so damaging to our and undermining of both our economic approaches and our policy approaches here. But let me ask you, Secretary Powell, even before the COVID-19 crisis, many Minnesotans were struggling to find an affordable place to live. And last year, I spoke with hundreds and hundreds of Minnesotans and family community leaders about this challenge, housing developers as well. And they all told us that at every part of the housing continuum, from housing for homeless people and supportive housing all the way up to workforce housing, that this is a significant problem and a significant affordability challenge. And so now we have this coronavirus challenge. So I, along with many of my colleagues on this committee, have been pushing for support for housing, $11.5 billion for homeless assistance, $100 billion for rental assistance, and $75 billion to stabilize homeowners. Chair Powell, could you talk a little bit about the importance of the housing sector in our economy right now and what challenges you see ahead for us as we are living through this crisis? And I appreciate what you said. The most important policy objectives should be to keep people in their homes and keep them paying the bills.
So these are longer running problems, which are of course under particular pressure right now. But as an example, a lot of the jobs are in big urban areas more and more. That's where the job creation is, and yet the cost of living in those places is higher and higher, very high. And often people who are in the service industries providing their services have to commute very long times to be able to afford to live in a place. So it's an issue that's been with us for a while. It's not one really that the Fed can affect much other than by affording, fair lending laws and things like that. But we can't really directly affect those, but they are important to our economy.
Well, and I realize that you don't want to comment specifically on the specific policy issues that we have confronting us here in Congress, but in general, do you see a risk to the housing market as the economy continues to take a downturn in the months ahead?
Well, I think there are multiple risks. One is just to the extent forbearance doesn't do the job, you may have people losing their homes. That's something, given that this is a natural disaster in a way, that's something that would be great to avoid. You also see the housing industry coming, I won't say to a halt, but under great pressure. Activity being slowly, that's a lot of jobs right there. So I think, really it comes down to sensibly, thoughtfully opening up the economy in a way that builds confidence and keeps people safe. And I think that's really important that we do that well. And if we do, these other things will take care of themselves over time.
This is an issue that I think we should continue to work on and talk about the challenges that people will have if they do lose their home, the ripple effect of people not being able to pay their rent or their mortgage, and then the impact that has all the way up the through the housing continuum, I think is a great concern. And if you don't have a safe place to live, then nothing else in your life works. I believe that this is something that's really important for us to address in the next package. Thank you very much, Mr. Chair.
Thank you, Senator Smith. And we have also been joined now by Senator Sinema, so she will be the last questioner. She will be with us on audio only. And thank you, Senator Sinema. If you finish in your 5 minutes, I may make it to the vote.
Well, thank you, Mr. Chairman, and thank you to our witnesses for being here today. Everyday Arizonans from every corner of my state are worried about their health and their future. And that's why my office has doubled our state team to better serve Arizonans during this difficult time. Our goal is to offer top-notch constituent services, connecting Arizonans with resources, and going the extra mile to ensure they get the assistance they need. I'm glad that we're having an oversight hearing today because robust congressional oversight is critical to ensuring we know where the CARES Act money is going and how it's going to be spent. It's also vital to ensuring that Arizonans are not stuck in government bureaucracy. I'm focused on cutting through that red tape to help Arizonans. My first question is for Secretary Mnuchin. Let's start with the economic injury disaster loans. I sent you and Administrator Carranza a letter on April 17th outlining my concerns with how the administration has run this program. I have not received a response. The CARES Act promises small businesses a $10,000 loan advance within 3 days of their application. I know Arizonans who went through this process. None of them got their loan advance within 3 days, and no one received the full $10,000. Why aren't they getting that full amount, and why aren't they getting it on time?
Well, first of all, let me just apologize that you haven't received a response. I will look into that after this and get back to you. As it relates to the EIDL program, again, that's within the SBA, but let me just comment that the SBA had significant systems issues getting the EIDL program up and running. I thought the grants were doing much better than the loans, so I'll follow up and look at that. On the loans, they're rebuilding the entire system because I think, as you know, we have over 5 million loans to process, but we will follow up with you.
As you know, the SBA internally changed the policy of EIDL to only issue $1,000 loan advances per employee up to $10,000. The original plan was $10,000 per company. Who authorized the change and why was it made?
I believe the SBA administrator made that change, and I believe her thought on that was that there was limited money and try to spread it out amongst as many companies as possible.
And she did not think to herself, let's go back and ask Congress to authorize more funding to pay for that which they appropriated and called for in the legislation.
Well, there was additional money in the second phase, and we appreciate that Congress reacted to that.
Okay, but Secretary, my question is that the SBA made this internal change without getting authorization from Congress. And if they're saying they did it because they didn't have enough money, we then gave more money and they still haven't used it to give that money to people as promised as the $10,000 in the original legislation.
As I said, I'm more than happy to follow up with you. I'm not involved in some of the direct specifics of that. So let me follow up with your office.
I appreciate that, Secretary. The last thing I'll say about the EIDL loans, my office is right now working on over 300 outstanding EIDL cases. Some of them are dating all the way back to early and mid-March. Can your team commit to work with mine to get these cases moved through quickly?
I commit we will work with the SBA to follow up. That's not acceptable. So we'll follow up with the SBA with you.
I appreciate that. I have some questions about the Paycheck Protection Program as well. Small business owners in Arizona are asking for guidance on how the loan forgiveness works, and the lack of guidance has made it difficult for small businesses to plan. We received some guidance last Friday, and there's more still to come. Could you tell me why it's taking so long to get guidance for small businesses on the loan forgiveness aspect of PPP?
Or just comment, I think, you know, this was a very complicated program that we set up in a short period of time. I thought that the guidance we put out dealt with all the issues, but if there's specific issues that you're hearing from, we will follow up with you and provide that clarity.
I appreciate that. We would like to follow up specifically. As you know, the application to get your PPP loan was only 1 page long, but the forgiveness application is 11 pages long, and according to my staff, requires a minimum of 3 hours to complete. This is a real problem for mom and pop shops in Arizona. what efforts can we offer to assist small businesses in filling out the complex form?
Well, I can assure you, I spent a lot of time on the complexity of that. We tried to get it as short as we could under the requirements of the law. I hope it doesn't take 3 hours for small business. But again, we tried to make it as short as possible.
I appreciate that. Mr. Chairman, I see that my time has expired. I would like you to make it to the vote. I have many more questions. I'll submit some of them in writing. Thank you so much, Mr. Chairman.
Thank you, Chris, and I really appreciate that. And I understand Senator Brown wants to make a 60-second statement. You can do so, please.
I will do 60 seconds. Thank you, Mr. Chairman. Another successful hearing. Thank you, Chair Powell and Secretary Mnuchin. I wear on my lapel, as I've said before, a pen depicting a canary in a birdcage instead of the official Senate pen. You all know the story. The mine workers took the canary down in the mines to warn of poisonous gas. He didn't have a union strong enough to protect him in those days, or a government that cared enough. That's why we had the New Deal with worker protections and public health. Now, a century later, it's starting to feel like we're back in the mines. Millions of American workers don't have a union to protect them after decades of corporate attacks. And based on the responses we've heard today and what we've heard, especially from the president over the past few months, it seems that once again, workers don't have a government that cares enough to protect them. I mean, look at how the administration treats essential workers, women, especially African-American, Latino workers, putting their lives on the line. Look at who they're willing to spend money on. This administration, it tells us everything we need to know. That's why Congress needs to stand up for workers. It's why workers need unions, so we can fight back for economic security and safety protections and the dignity they deserve, and for American values. So, Mr. Chairman, thank you for allowing me the last minute or so.
Well, thank you. And I also want to thank you, Senator Brown, for your cooperation and working with us to have this hearing and help it to work out. I appreciate the cooperative way in which we have been able to work on these hearings. I do disagree with the notion that our secretary and our chairman here are not working very hard to make sure that the support we have voted on gets out to those very people, those who have these lower paying jobs, those who are in the service industry, the small businesses, the medium-sized businesses, and those places that will be needed to stand up our economy as we have the opportunity to do so. So we may have a different point of view on that, but I do appreciate your support in helping me get this hearing set up and working. And to our witnesses, Secretary Mnuchin, Chairman Powell, I again appreciate your cooperation and work with me as we've put together this hearing. We are plowing new ground here in the Senate, as is happening across this nation while we deal with COVID-19, and your cooperation in working to get us through this hearing and get your report to us is deeply appreciated. With that, I will say that for senators who wish to submit questions for the record, those questions are due on Tuesday, May 26th. And I ask you, our witnesses, to respond to those questions as quickly as possible. Again, thank you each.
I don't hear anything. This is Balance of Power. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We've been listening to and watching live testimony before the Senate Banking Committee of the Fed Chair, Jay Powell, as well as Secretary of Treasury, Steven Mnuchin. And it was about the implementation of the CARES Act, which is injecting trillions of dollars into the U.S. economy. They covered an awful lot of ground in just over 2 hours. And to help us go over some of the ground, we welcome now Michael McKee, our Chief Economics and Policy Correspondent. Mike, if you can hear me, it strikes me that this was about the CARES Act, but a lot of the questions from the Democrats were not about that at all. It's about what comes after the CARES Act.
Yeah, although for the most part they were framed in terms of the CARE Act and how it's being administered. A lot of questions about 4 specific programs within that. One, the Main Street program for small and medium-sized businesses. There were questions to Chairman Powell about why that's not up and running and when that will be. He said it should be by the end of the month. And then there are questions about who's going to be eligible for the loans. A lot of concern about where we go from here, whether companies are still going to be around when the economy starts operating again. Similar questions raised about the Paycheck Protection Program and some of its rules and regulations, including the idea that you could keep people on payrolls for 8 weeks. And everybody who was getting the money said that that's not long enough because the economy is not open yet. They would just have to let people go again. There were also questions about the secondary lending program. There were some questions about whether the Fed is taking on risk that it doesn't need to. And Jay Powell said, we are not buying junk bonds across the board. We are buying some fallen angels. And the idea is that we keep the market open. We're not trying to load up on these bills. And finally, they talked about the municipal lending facility, and there's a lot of concern among the Democrats that cities and counties are not going to be able to make it through to the end of their fiscal year. They're going to have to lay people off. Both Powell and Secretary Mnuchin suggested that they are going to have this facility up and running soon, and it will help. But this is where Jay Powell suggested Congress may need to do more. He tried to stay away from giving them advice, but suggested that they're a lending program, as he said before, not a spending program. And so if you really need to assist people, you're going to have to consider how to do it. That's basically the highlights, with the exception of the fact that Steve Mnuchin, this is important to the Treasury market, said he does want to term out the Treasury's lending, or borrowing rather, as they try to fill the deficit hole. They're going to buy more and more long-term, long maturity securities.
So, Mike, as you say, they're going to get this Main Street lending program up apparently by the end of the month. But is there some irony here in the sense that an awful lot of the talk when they first passed this act was we have to help the small businesses? And in fact, it turns out apparently it's easier to loan to big business than to small business. It seems to be much more difficult for the Fed to get it up and running when it's a lot of small businesses.
Yeah, and what they're finding out is that medium-sized businesses are the ones that are the hardest to lend to at all. Big businesses can basically go to the capital markets, and that's what they've essentially tried to have them do. And what the Fed did was open those markets, put money into the markets to make sure that they would function, that there would be buyers and sellers. The Paycheck Protection Program got off to a rocky start because it didn't have enough money initially, and the banks weren't sure what the rules were, and they tended to lend to their existing customers because of laws that require them to know who their customers are and prevent money laundering, things like that. It's the medium-sized businesses that have been in real trouble now because the Fed has taken so long to get this up and running. Part of their problem is they don't want to get stuck, they can't get stuck with bad loans. And so how do you evaluate a lot of companies, maybe private companies that don't have borrowing track records? How do you know that they're going to pay back? And so that's been one of the holdups. So all of this was passed with good intention, but we know that what road that is paved.
There was an awful lot of talk today, again, particularly from the Democrat side, about state and local government support and also about first responders, people on the front lines. That has to do, I'm sure, with what Nancy Pelosi, the Speaker of the House, has proposed for the next phase. If the Democrats were looking for Jay Powell, the Fed chair, to give them some support that we have to get moving on this right away, I'm not sure I heard it.
No, you really didn't. He was much more forthright to the extent that he actually advocates anything. In his 60 Minutes interview, and then last week when he spoke to the Peterson Institute, saying that the Fed and Congress need to do more. He told Scott Pelley of CBS that Congress could do a lot more. And one of the major concerns that Democrats have had, and state governors have had, is that they are going to run short of money, and these first responders are going to have to lose their jobs. And there is also a shortage of money for hospitals that have had to get rid of elective surgery to treat COVID patients. And so there's this shortfall of money that the people who have been dealing with this first hand are the ones who end up losing. And Powell suggested more needs to be done, but he didn't really go down the road of advocacy today.
So, Mike, we listened to more than 2 hours of this testimony. Having listened to the whole thing, is it your impression that anything will change? I mean, they're going to do this every quarter, as I understand it, review what's going on with the CARES Act. Is it going to change anything, either at the Treasury Department or the Fed?
I don't think this hearing is, but a lot of the topics that came up are subject to negotiation. You heard Secretary Mnuchin saying that they are considering tweaks to the Paycheck Protection Program to try to make that more workable. The Fed, I'm sure, has been taking on board critiques of its small and medium-sized lending, the Main Street program. And so altogether, there are lessons learned that are going into what happens next, both in new programs and the programs that they are managing now. I think John Tester also had an interesting point that while everybody's promised some sort of transparency with these loans, the data haven't been posted yet. And so that's going to be one change that I'm sure it comes along fairly quickly. They'll start putting up who borrowed, how much they borrowed, and then we'll start diving into, or at least Congress will, whether it was fair or not and how it was all handled.
It was a fun exchange between Senator Tester and Secretary Mnuchin where he said, it's on the website, Senator. He says, I can't find it. I look for it. I can't find it. Thanks so much to Mike McKee. Always great to have you on these issues, Michael. So the reason why we had the CARES Act was to try to help the economy recover as quickly as possible. We talked earlier today with the Chairman and CEO of Bank of America, Brian Moynihan, to get his view on whether really the recovery will come as fast as he originally thought it would. And this is what he said.
This is a healthcare crisis. And as you're starting to see the healthcare crisis be mitigated, not solved yet, you're starting to see the economy start to recover, and we can talk about that. But the approach to winning the war against the crisis for us has been a customer-centric, community-centric, employee-centric move. And so, we've been out there driving it. We've been supporting our clients and trying to make sure they have the credit and capital to do what they need to do and help them through this trough of activity in the second quarter. And you can see that in the loan balances extended to PPP loans and other things we've done. We've helped our consumer clients through waivers so they have the ability to have better cash flow in a house. We've helped our teammates by saying no layoffs so they know their job is secure and then getting them safe and working from home. And then we've helped our communities by contributions of $100 million in CDFI investments, which are community development financial institutions, at $250 million, of which about $170 million is already out. So all that is offsetting the impacts of the current second quarter downdraft that you've seen with the unemployment numbers, and we don't see it much differently. It's just that we're starting to see us come out the other side of this, frankly.
So we have heard from the Federal Reserve, and they've expressed some concern, at least, that as this pandemic continues, there may be some threat to the overall system. And specifically, they talk, for example, about commercial real estate. Are you seeing some parts of the market that are particularly vulnerable on the credit side?
Remember that the U.S. economy is going to be dependent on the activity of the consumer base, and so you always have to start there when you talk about the U.S. So even though we have this year from the Bank of America research team, which is the best in the world, being minus 5%, 5.5% this year and plus 5% next year, the real question will be how do consumers behave. And what we've seen since the low point in the first couple weeks of April in terms of everything, in terms of their spending because of the stay-at-home edicts, in terms of their borrowing activity, in terms of the transfer of money, you saw all that fall to a lowest level. And obviously things like travel and hotels and things are most affected. But as you've seen steadily, as you went through the third week of April and on into the first part of May, you're seeing their activities pick up even in the states that are still under stay from home. And you're seeing the activity pick up much quicker in the places they're going back to work. And so for the month of May, we're seeing it down about 2, 3, 4% versus last year. For the year to date, it's down a couple percent. And that's the question. The length of this is going to be how the consumers behave, given the high levels of unemployment that you've seen published. When people get back to work, jobs coming back in, the stimulus payments, which are all hitting the street over the last few weeks, and how it all works together to see if the consumer's behavior changed. And when you hear Chair Powell and others, the concern I have is have we changed consumer behavior as we look out across the next 4, 5, 6 quarters.
Well, that is a key question, maybe the key question, Brian, clearly. When it comes to the consumer, I know you've already taken about $4.8 billion reserve against credit, possible losses. Given the level of unemployment, which is really quite stunning, do you think that's going to be enough?
Well, what you've seen so far is with the consumer help, we've granted about 1.5 million payment deferrals. But if you look at the actual interesting statistics, about 35 or 40% of the people asked for a credit card payment deferral went ahead and made the payment. And if you go and look at those consumers, what you see is because leave aside the issue of where the money is coming from, you're seeing higher balance in our account. And that's because the stimulus between the EIP payments, between the enhanced unemployment, these measures taken by Congress and by the administration and by the Fed have worked to offset the unfortunate aspects of very high unemployment. And so far you're not seeing the delinquencies and things rise. You've seen payment deferrals increase, but you're seeing them start to level off and come down in our book. And so we expect to see charge-offs coming later on as this thing goes on. But the reality is right now you're not seeing the kind of credit damage that you'd expect to see with this amount of downdraft and activity. The question is what happens next, and that's what we're all watching.
And to that very point, you said in the past China, to some extent, may give us some indication. We've seen numbers coming out of China, Brian, that indicate the industrial production has come back pretty quickly. Oil consumption is coming back as well. But on the other hand, consumer maybe not so much with retail sales. Does that give you cause for concern back here in the United States?
Well, it does, because the question is how do you change behavior? So when you saw China, you saw they went into this earlier, they locked down earlier, they came out earlier. And, we're back in our, offices in China moving from 50% of people back to work to 80%. So you're starting to see a normalization of activity. And then the question is, what's the underlying activity in restaurants and shopping and things like that? And so you saw an immediate burst of activity as they open back up, and you see it fall back down. And that's what we have to watch in the United States is there'll be a burst of activity in some of these places as people who have been in their homes for 5, 6, 7, 8 weeks, go back out and do things, and then will that sustain? And that's where you need to look more fundamentally on things like car purchases and things like house purchases and see where they start to end up over time. But remember, the baseline projection for most people is the economy doesn't get back to its current size until you get to sort of the end of next year. That's the definition of a recovery. But each quarter from this quarter forward is increased economic activity, and what we have to make sure, and all the policies and stimulus have been put in place, are making sure is that despite the very high unemployment, despite the issues of who's unemployed, despite the issues that we need to get people back to work and the human toll of all that, the stimulus is offsetting it. It is an attempt to offset that, and you have to see that play out over time.
Brian, you have something like 180,000, I think, people working from home right now. You talked about what you're doing over in Asia. When do you expect them to come back, and how? And by the way, how many? Will they all come back?
Well, the idea is we've always had people who worked outside the standard office setting, and that's something we do. There's a great debate, will this change forever the workforce in America and where they want to work? We'll see that play out, but that is further out there. In the near term, we have been open every day. We have not shut down, except for the branches we closed out of concerns to keep our teammates safe in those branches, which is about 40% of the branches. Everything else has been open. We've been functioning every day, and we're beginning to open those branches, especially in the states that are reopening slowly but surely. So we have the ability to operate very well, very much under control. Our tech and ops team under Kathy Besant's leadership did a fabulous job of putting us in position to have 180,000 people work from home. So we can operate this way. So we have the luxury to go back slowly, and with social distancing requirements, with temperature taking, with all the policies that all employers want to put in place, the ability to have the luxury of putting people back in place carefully also takes the burden off of the communities we operate in, not to have a high level of cases or infections and having people move around and creating pressure on the community. So we'll go back slowly. We haven't set any plans yet. We have a top talent team working on the reentry back to the office. It's not back to work. We're working every day. It's back to the office.
Yes, sure. No, I understand. Brian, finally, we're going to hear from Federal Reserve Chair Jay Powell today as part of the CARES Act, a report on that. He's been doing a fair amount of talking already. What would you like to hear from Chair Powell today?
Well, I think you're going to hear from both Secretary Mnuchin and Chair Powell, and I think people have to step back. There's the PPP program is now, still has money left. The applications are still coming in. The dollar volume of loans is going up, but the number of loans is going up faster, so the loans are smaller and smaller. In our case, we've done 320,000 of them as of this morning, 80,000 average balance. It's 98% of the employers are under 100, 80% are under 10 employees. And so these are small businesses that are getting the help they need. And so I think what you want to hear is where's the next rounds of their ideas to continue to put money into the economy to help, because it's not an unlimited resource. So we need to keep adding it carefully. And the areas I think that need the most help in the near term are the states, because of the incredible budget pressure they've been put under. And if we don't help them, we'll see them have to make budget adjustments, which will add to the unemployment burden. To the hospitals and things, it's a similar issue in terms of having to shut down and lose revenue, and they need to get that hole plugged so they can get back to it. And in some respects, some of the nonprofits and the performance nonprofits especially, the same issue, universities. So the idea is the stimulus has to continue to help Americans through the unemployment assist benefits and things like that, but also it can be targeted in the next rounds towards these places that just have operating holes that we have to decide as a society we're going to replace so that they can get back and provide the great services they provide. And so that's what you like to hear. In terms of the work, and there's a lot of discussion about facilities and usage and up and operating. A lot of these facilities were put in place to stabilize, and you see massive stabilization in the market so that high-grade issuance will have another record month probably this month. High yield will have a strong month. You're starting to see converts and some equity deals get done. The stabilization and the fact those facilities aren't all used is actually good news. That means the markets are doing what they're doing and providing capital. So what I think people get focused on is how much money is outstanding on facility X or something. The reality is having it there provides a comfort that the private sector can drive it and the banking system can drive it. So whether it's Main Street, whether it's some of these other facilities, the debate ought to be not about whether they're being used, about the good news. If they're not being used, that means you've seen stability in the funding structures.
That was Bank of America Chairman and CEO Brian Moynihan speaking with Bloomberg Television earlier today. It is time now to check on what's going on in the markets. For that, we turn to Abigail Doolittle. So, Abigail, yesterday we had a big day up. Today, I'm not sure the markets can quite decide where they're going.
Very small moves here at this point, fluctuating. The major averages are between gains and losses. We have the NASDAQ outperforming. The S&P 500 and the Dow are mainly lower. And this reflects a bit of a tension that we've been seeing all year. Now, to your point, we had that huge rally yesterday, the best day in about 6 weeks. The bulls really charging on Powell's conversation with 60 Minutes CBS over the weekend, saying that the Fed is there to do whatever it will take to support the economy and the system. Investors responded very, very well. Today, the testimony of Jerome Powell and Stephen Mnuchin not really doing much for the market. So that tells you not a lot of new information coming out there. Just enough, though, to keep those gains in place. The tension, though, that I was talking about that we've seen all year, we have the tech sector leading some of the other stay-at-home sectors on the year, such as consumer discretionary and healthcare toward the top. But the banks, once again, getting hammered. That's not great, David, because that, of course, is a cyclical sector. So the fact that you have this composition of this year's rally and the recent rally not quite as economically strong as you would want, not great. And, of course, you see investors going to bonds. And all of this leads to that range we've been talking about. Neither the bulls nor the bears over the last month, David, can get out of their way. The S&P 500 E-mini futures stuck right in a range. It's going to be very interesting to see whether or not the buyers can take charge, since we are near the top of that range.
Abigail, at the same time, we had some earnings out today. Walmart came out, and that sort of was news to the upside, wasn't it?
Walmart put up a very good quarter. In fact, they talked about the best growth in 2 decades. Same-store sales up about 10%. That stock popping sharply higher, up about 7.6%. Consumer staples overall down, but the shift that happened for Walmart that you and Brian Moynihan talked about earlier this morning, the idea that consumer habits could be changing. They at least have changed, of course, during the shutdown, going more toward staples and stockpiling and online. And that, of course, has helped Amazon on the year as well. But Walmart really outperformed on that shift in consumer behavior. Whether or not it lasts is to be seen.
Okay, Abigail, thank you so much for that report on the markets. And now we go to Washington, to our chief Washington correspondent, Kevin Cirilli. So, Kevin, we've been watching this testimony up before the Senate Banking Committee all day, and some of it was really political, wasn't it, with the Democrats and the Republicans playing a tug of war about what needs to come next?
Yeah, it's been really fascinating. 2 big takeaways here as Democrats really pushing for there to be another round of economic stimulus. And Fed Chair Jay Powell saying that he's going to leave that up to Congress to decide. And at times signaling that there might be some type of need for more economic stimulus. Of course, Democrats really want to see that come to fruition in the short term, but Republicans saying not so fast, and emboldened by the likes of people like Treasury Secretary Stephen Mnuchin, as well as administration officials who say the best way to get the economy back on track is to, in fact, reopen the economy itself. And you're seeing that play out across the country in states quite frankly, traditionally governed by Republicans, such as what you're seeing in Texas, where states are reopening and ready for business. So it's really been a microcosm of the debate that states at the local level, David, are having to navigate on. The president, for his part, of course, not participating in the hearing, but I'm told keeping an eye on it. But also, he has suggested that bailing out states would not be something that his administration would be able to get behind.
Yeah, I wanted to talk about the president because I wonder if there's debate going on even within the president himself, in the sense that he clearly wants the country opened back up again before November, but he also needs the economy going. Does he need some sort of stimulus, whether it's bailing out states or not, whatever you call it, to make sure that things are hitting on all cylinders come November for his reelection?
So 3 quick points. First and foremost, yes, absolutely. This is definitely going to be an upended economic election. The campaign officials that I talk with say that they're willing to draw that contrast. They are willing to take it to battleground states, Michigan and Wisconsin, for example, David, where they say, hey, we want to reopen the economy. Democrats want to keep it shut down. So they feel confident that that would play well to independent voters and, of course, to their base. Secondly, I think you're going to be hearing a lot more in the coming weeks about unemployment benefits, especially for how conservatives are going to be talking about that and who really, in fact, benefits on unemployment. But finally, you know, I spoke with the Democratic strategist just last evening, and what this strategist said is that the Biden campaign is really been benefiting by not having to do back and forth rallies and not having to really get out there, and that this strategy of doing local media from the basement of where Biden is has played to their advantage, and with all the attention on Trump. Now, I would also argue that that is a strategy that the Clinton campaign had in 2016, but the dynamics of this race still very much in the fog of the pandemic, and I'm not sure that we have any clarity for how it's going to play out in the fourth quarter and the sprint to November.
Yeah, exactly. And the question is, how do they have to position themselves so they're not just victims of the virus, so they just give up all initiative?
Exactly. And I think just what I would point is that there seems to be a consensus that the economic recovery isn't really going to kickstart until next year.
Okay, Kevin, thank you so much. Really great to have you back with us. That's our chief Washington correspondent, Kevin Cirilli. Coming up, we're going to have a second hour Balance of Power over on radio, and we're going to talk about other things, about the U.S.-Chinese relations with Rufus Yerkes. He's the head of the National Trade Council. That's going to be coming up on Balance of Power, second hour on Bloomberg Radio. Thank you for joining us for this first hour, and this is Bloomberg.